So I am getting pumped that more people are getting in this market and their investment choices are widening. I think the IPO market is working perfectly. At least it did with that sleek toaster oven. The so-so internet retailer was down. Now, there may be some madness in a Chinese supermarket stock. I'm not sure. Let's bring in some experts to help hash it all out. Keith Fitzgerald from the Fitzgerald Group. He's the principal there. Market Gauge Group Managing Director Michelle Snyder's with us as well. And Point View Wealth Management President, Chief Investment Strategist David Dietze. Keith, first of all, why didn't you tell me about this ball meetup? My man, you know all the hot products in Japan. I could have gotten a few of these for Christmas. But beyond that, your assessment of IPO mania, and have you bought any new issues this year?
Well, I tell you what, I got a few extra pounds on me because of toasters like that and all the good eating in Japan. But, I love this IPO market because, to your point, individual investors are beating the pants off of Wall Street right now. So, yes, I did go after Palantir and Luminar specifically. The rest of it I've steered clear because I want to see a quarter or two public numbers. Then I can put the pieces together. But meanwhile, big data, biggest trend of our investing lifetime. Very happy to get my hands on those things.
I'm glad you said that. Big data, everyone needs to focus on big data and the collection of it, the security of it, the distribution of it. It's not a one-day event. It's a lifetime event, at least over the next 10 years. David, I want to go to you because I know you're sort of an old-school guy, and I want your thoughts on these IPOs and SPACs. I separate them. I'm a little bit more dubious with the SPACs, but do all of them in general have you worried at all?
Well, absolutely. So, I applaud the retail investor getting involved. No one treats your money better than you yourself do. But why make the job so much tougher by chasing after companies which really have very little track record? Remember, these IPOs coming public, there is no analyst coverage. They don't have a long history of operation in various economic climates. They haven't had to face competition yet. So I think you make it more difficult for yourself to get into these stocks, which you really have so much difficulty learning about. And of course, remember, if you just look back a couple months, often there were prior private equity rounds that were much lower than the price being offered to the public. And then on top of that, to buy it in the aftermarket where it's much higher than what the underwriters agreed upon, I think that puts the odds against you. And I'm cautious about that.
Right. I'm frustrated at the system, the process. I agree. It goes on too long, and they come out too expensive. But some of them have been grand slams. Michelle, I did see on your Twitter feed where you said people were kind of worried about this not being a top or not. But you seem to be pretty confident that this rally is going to continue. Why?
Well, there's a few reasons. One, Charles Payne, you've been one of the most optimistic people I've seen. Two is more stimulus, definitely going to happen. It's just a matter of when. The Fed said yesterday they're going to continue to be more accommodative. The vaccines will start rolling out. They've already begun. Businesses will begin to reopen. But more importantly, you've got such pent-up demand by the consumer, as you're seeing here with some of these IPOs. People are dying to spend money, and since we're a consumer-based economy, that's going to be great for the GDP and the bottom line. And also, as we talked about before, this rotation into the real economic growth of that we're seeing here in the small caps, the transportation, and the retail. If that continues, we're good to go.
Yeah, even in tech world, Microsoft is down, but Datadog and these others are up. I think that individual investors see something in longer term that maybe Wall Street's missing. Keith, I want to go back to you because I also find it interesting. Financial media, this sort of fixation now, it's starting to bubble up. I'm seeing it, imminent crash. But of course, so many Wall Street firms at the same token are saying 2021 is going to be huge. So the pontificators are saying, stay away, although Wall Street themselves, maybe not so. Your thoughts?
Well, number one, this is all about psychology. It is very tempting to believe a perma-bear or a naysayer because the implication is that somehow they're seeing something the rest of us aren't seeing, or they're looking around a corner that we can't see. But, I come down to it very simply. Something like Palantir, for example, has been around 17 years. It just went public recently. The next 10 years are what matters. It's not where we've been. It's where we're going. So, yeah, perma-bears are out there. Yeah, there's lots of doubt, but profits are always the currency of success. And if you can identify those, then you understand where you're going, not where you've been.
David, I do wonder, though, just closer, nearer term, could there be some kind of anticlimactic sort of morning after, right? Because we had the Fed yesterday, and then we may get stimulus today. Could there be sort of a, okay, what's next kind of feeling to this market?
Well, that's the nature of markets. They're always looking ahead 6 to 9 months. I don't think that this market has been driven for the last 4 or 5 months based on the stimulus. In fact, we haven't gotten it. We're still frustrated. So I don't think that's going to have the biggest effect. What we're watching with my clients first, it still comes back to the virus. We're so excited about the Pfizer Moderna news, but we're still looking at possibility of mutations, distribution issues. Will everyone take it? I think that's even more important next year than what we got with the stimulus. And finally, it's all about interest rates, Charles. You know, the long-dated treasuries have actually done better this year than the S&P 500. They're not worried about, the long-dated treasuries aren't worried about stimulus or the virus or anything like that. It's all about financial engineering. So if for some reason interest rates start to creep up next year, that could also be a major headwind in this market.
Well, if the market is worried about mutations, it's having a weird way of showing it. We're running out of time, and I want to narrow this down to some more individual names. Established companies, another story I'm seeing here where you have these either established companies or even industries that are reinventing themselves. Give you an example. Rite Aid, I'm calling it the stock of the day. Mind-blowing earnings. We know that's a company that's had a long trouble of getting its act together. Airlines got a big upgrade this morning. David, if I can, real quick, let me go back to you first. Sifting through the rubble, looking at these underperforming names, how do we find these gems?
So I like to look for sectors and themes which have been long-term winners that have been out of favor. That could include like dividend-paying stocks. That could include cyclical stocks. And then once I find those sectors, I look for the best franchises, those that have the largest market share, good management, good dividends. Those are the things I'm looking for, Charles.
Michelle, you're an award-winning stock picker. What's your approach?
Well, basically, to sort of like that, I like to look at the macro trend and particularly the different social trends, and then I will add my technicals to it. I use the floor trader secrets, which basically is understanding the phase, the moving averages, understanding the momentum, understanding the relative performance, and then executing based on opening ranges. Knowing your risk reward, to me, is the most important thing. But it always starts with the idea of what's trending.
All right. And Keith, I'm going to give you the last word. If you can, we didn't get a chance to hit on it, but Lennar, the #1 performer in the S&P 500, great numbers on top of amazing housing starts and permits. Is this going to keep going?
You know, tough to say. I think homes are a very fickle investment. They come and go, but I look for things that are unstoppable, imminent, and inevitable. Apple, I think, doubles in the next 12 to 24 months as it makes its medical pivot. The market still doesn't recognize that, and the fact that the stock hasn't gone anywhere is a play I'd take over home builders, for example.
Love it. Fantastic stuff. Keith, Michelle, David, thank you very much. We got a lot in, and I appreciate it.